All right. Yeah. Oh, is there a clicker, by the way? Or oh yeah, I'll bring it. Okay. Yeah. Hi everyone. Yeah. So my name is John Whaley. Um, thank you. Yeah. Yeah. Great. Great to be here. And so what I hope is that at the end of this, you'll get a good sense of how to identify these great AI native startups and founders, and then how to kind of think about investing in them, because we're at this really unique juncture right now, which makes it really, really interesting. I think this is now the most exciting time that I've seen in my career so far, like around this. But there's also a lot of hype and a lot of warning signs and stuff there. So happy to get into it. Yeah, so just quickly about me. So I've founded three companies so far, all in cybersecurity. I teach at Stanford. I'm on the faculty at Stanford in the computer science department. I teach CS 224G, which is one of the classes that filled up the fastest at Stanford. It's about building applications using large language models. And then I run an accelerator program for early stage AI founders called Inception. Some of you may have heard about it before. But yeah, that's also been really successful, and now we have a fund associated with that as well. So when you look at I look at AI, both from the kind of academic researcher point of view, from the industry point of view, and also from like an investor point of view. And so based on that vantage point, I get a really unique insight on a number of these, this upcoming wave. It's really exciting, but there's also, like I mentioned, like a lot of downsides there that like things to be careful of, right? And so if you look at Gen AI spending and investment, we're kind of in this time period now where there's a lot of investment that's happening, but there's also a lot of cautionary things to be careful about, right? So this is crazy, but like in this 4-year time period between 2023 and 2027, $3 trillion are going to be spent on IT, and a majority of that will be on AI. Which is just mind blowing, considering if you look at even maybe 8 or 10 years ago, AI doesn't even register. It's like it doesn't even fit on the pie chart. Now it's more than half of the pie chart is AI, right? And so there's going to be huge investments in AI. Just it's already started, and it continue to start, right? Yeah, and then I guess this is as of 2024, 45% of the total VC funding in the world is going into Gen AI. That's almost half of the money of VC money is going into Gen AI, right? And this is like it's continuing this year as well. I think it's probably the percentage may even be higher this year, right? 72% of the world's funding goes into companies like AI for AI funding goes into companies that are in a 30-40 mile radius of here. It's like all in, and the rest of the world combined is only 28%. So this and I think that this is becoming even more concentrated over time. So this is the world epicenter for Gen AI, and this will continue to be the case, right? The VC funding, there was a going through the pandemic, there was kind of a downturn. Things have now returned back to the trend line that they were on in 2028, right? And so now there's going to be a very tumultuous time. So by the end of 2025, these tech forward companies, like the ones that are embracing Gen AI, they're going to start to see really large productivity gains from Gen AI. And the CEOs and the boards of these companies, they're going to need to decide how they're going to invest those type of productivity gains. Are they going to invest it in product and growth, or are they going to invest those into profit? There's going to be a new generation of companies that are going to be much more highly efficient because of the productivity gains from Gen AI, right? And so there's going to be much smaller companies that can be they can be very highly profitable because they're leaning into it. On the flip side, some companies will then take those productivity gains and then use that and to invest in growth and product, right, and increasing the capabilities. Right, so it's going to be an interesting time to see for those successful projects. That being said, by 2026, over 50% of the enterprise Gen AI solution deployments will fail. So there's a huge investment, huge promise. All of the boards, all of the CEOs, executives, they see that this is a transformative technology. This stuff is going to change. That being said, more than half of these solution deployments were failed due to a whole variety of reasons, right? Another thing is that right now, there's a startup world where, very much it's about agile. It's about agile development, moving much more rapidly, like fast iteration cycles, things like that. We are here in Silicon Valley. We're used to this. The majority of the world is not. They're still kind of doing more of a waterfall model where it's much longer development cycles. Maybe about half of them today. This is going to increase up to 75%. So what's going to happen is larger organizations are going to start to act more like startups, or the ones that are going to be successful are going to start to act more like startups. They're going to have more that rapid development, agile methodology, right? By 2028, half of all the interactions that'll happen will be done by AI agents. This is insane, but this is this. By the way, a lot of this data is from Gartner and some of the top analyst firms, and I in general agree with all of these forecasts as well. So half will be done by AI agents, right? There's all of this investment in these big foundation models, right? I'm sure you know many of them. Very capital intensive, huge opportunities there, obviously, but there are far too many of them for which there's a market for, and it becomes really expensive game to play. So 3 of the top 10 model providers will end up being acquired or acqui-hired by big tech. So there's going to be a lot of disappointed investors there who have sunk even billions of dollars into these companies, and because they're either undercapitalized or not able to compete against other more well-funded competitors, they're going to end up not being the outcome that people would have hoped, right? So there's a lot of opportunity there, but there's also a lot of danger. In 2026, Gen AI enterprise productivity uplift features, like things like make it easier to write emails, make it easier to manage your spreadsheet, those type of things. Those are going to start to become free and bundled within the solutions, right? So there's a number of companies that are trying to build features on top of these products where it's like, hey, we're going to make it easier to make presentations, we're going to make it easier to write emails, we're going to make it easier to manage your spreadsheet. These are start going to be bundled in with the platforms, and so it becomes really hard to compete in that world where, well, I have my startup that has a product that may be better than the one that's bundled in Microsoft Office or in Google or any of these other ones, but this other one is free and bundled, so it becomes really hard to compete in those type of spaces, right? And this is inevitable. This will start to happen. It's already started to happen, already. And so it's going to be like around software bundling and distribution, around go-to-market becomes really, really important, as you look forward, in the upcoming years. Right? By 2026, 30% of Gen AI projects will be abandoned after the POC due to like data quality, risk, costs, or some unclear business value. So there's going to be lots of projects that are started. 30% of them are never going to exit POC. Of those ones, like the ones that do hit deployment, 50% of them are going to fail. So there's going to be a lot of disappointed, people who are investing a lot in these projects. And they're not going to see the returns. They're not going to end up being successful projects. That being said, everybody is still investing in this because they see the potential for massive, uplift in productivity gains, right? Because they're you're either going to adopt Gen AI and get these massive productivity gains, or like you will go the way of Blockbuster or go the way of Kodak or go the way of these companies that were left behind with like a new technological wave has happened, right? So it's a really, really interesting time to be working in this space where there's so much potential, so much opportunity. That being said, there's like a lot of danger there, right? There's a lot of projects that are not going to be successful, and there's a lot of investors that are going to be left holding the bag, where they're funding these projects that ultimately were not being commercial success, right? And you'll get kind of the Gen AI market, right? So in the next few years, this thing of like new features, product differentiation, that will only achieve at most a 6-month competitive advantage. As it is today, like usually when you are building a product, you can actually, if you build a really innovative product, some innovative solution, that will give you some sustainable advantage. That is going away because people at big companies as well, they can use those same tools and they can use that to tighten up the development cycle, and they can now develop things and much more quickly than they could in the past. And so what that means is that, like, if you have some new feature, new innovative features, some new product differentiation, other people will be able to copy it really easily utilizing Gen AI. And this is going to start to happen. You're going to see this in 2028, where it's like there's that type of competitive advantage, like time to market, is going to become a lot less important around like product differentiation, right? By 2026, the Gen AI is going to convert those MVP, the time to get to minimum viable product from, it's going to become days to weeks, as it is, normally today. When you think about this, it's like, especially in the enterprise, this is months to years. You're thinking about the time to kind of get to MVP. This is going to dramatically shorten because of Gen AI tools, right? That being said, by 2027, tech CEOs, their estimation of how rapidly technology is going to be adopted is going to end up being 80% too high. So we live in a bubble here within Silicon Valley. Of course, everybody wants self-driving cars, and of course, everybody wants agents that are going to do all of your work for you and all this. The rest of the world, the country and the world, is not so bullish on this. In fact, there's a lot of questioning about it, everything, and so there's going to be there's going to be an assumption that, hey, these are, of course, people want these, these features, right? When you get outside of our Silicon Valley bubble, you're gonna, like, many of these tech CEOs are going to hit a reality check about like how much people actually want to use these type of solutions and how quickly they're going to be adopted. So I mean, some just corollaries from all of this data, right? So number one is that companies that invest in Gen AI to increase productivity and reduce costs, companies will invest in Gen AI to increase productivity and reduce costs during this next economic downturn, because like there will be the economy is very cyclical. There will be a downturn at some point. Like it's become increasingly important to invest in productivity during that time. Gen AI is the biggest opportunity to do that we've seen in a long time. And so it's going to be increasing productivity and reducing costs. So there's going to be a lot of companies that are going to be investing in this, and they're going to use this to dramatically reduce their headcount and their cost of doing business while still maintaining the level of service. There's going to be a lot of companies that are doing that. There's other ones going to be doing this to invest in growth, right? They're going to but the ones that are investing, the smart ones, will be investing in Gen AI and Gen AI solutions, because otherwise they're just going to be left behind by companies that do. Because the companies that invest in Gen AI, they're going to have a distinct advantage over those who are laggards, because the efficiency gains that you get that are promised by generative AI will be massive. This is not like a 5%, 10%, in productivity improvement. There's already data, for example, for software development. Teams that use generative AI tools, like Cursor and Copilot and others, software development teams are 5 times as productive as those that do not. That's 5x, and that's what it is today. And the tools today are relatively rudimentary. They're only getting better, and so that gap will only increase. And there's a number of other areas, verticals, of which there's going to be similar productivity gains, right? And so if you look at that, it's like, well, I now have, we're able to move either 5 times faster, or I'm able to reduce the headcount to 1/5. It becomes impossible to compete if you're not embracing Gen AI. So that's the reason why so many organizations are excited about this, right? And so during the next economic downturn, this efficient growth, driven by productivity gains, that's going to end up being like a strong strategy there, right? Because they're growing responsibly. I think we are in a kind of a hype cycle now. There's a lot of investment in growth. We are upcoming to there's going to be a downturn, especially around Gen AI, as I'll talk about in a bit. But focusing on efficient growth that's driven by productivity gains, that becomes a really safe strategy, because then you're still able to kind of be able to grow while maintaining costs in a reasonable way. So, all of this being said, we're in this very mixed like environment now. Lots of excitement, lots of capital, lots of hype. But also, some things are in some ways overhyped, or that we're starting to kind of crash back to reality now, right? That being said, I still think that now is a great time to build. In fact, this is the best time to build that I've seen in my lifetime so far. I mean, exceeding kind of the late '90s, exceeding in like even the mobile wave, everything else. This is like a really really exciting time because we're at this interesting time in history where there's this major new capability in the form of these generative AI like foundation models. And nobody really understands the capabilities of this yet. Even the people who are building these models, they don't understand what they're capable of, but everyone agrees that these are going to be extremely important, right? And so this is a time where there's real benefits to being a builder, right? Because you get to explore the edges of this system. You get to understand like what is the state of the art and what these systems are good at and what they're not good at, right? And that will become a superpower going forward, right? Because again, if you're able to fully embrace these type of systems, you get a huge advantage. It's like it's a superpower compared to anybody other people who don't understand these systems, right? And there's some arguments about hey, how is it possible for small companies to compete against Google, and or Meta, or or any of the other large organizations? They have a large user base. They have tons of data. They have all the GPUs. They have tons of smart people working on this, right? And yeah, and that and so there's a lot of arguments about that. There's a lot of arguments. Well, okay, well maybe it's not a good time to quit my job, because because of the maybe it seems like it's becoming harder to raise money. Maybe it's there's how can I compete against these big companies? Like these are all true, but that being said, I firmly believe like this is such a radical change that the best ideas are not going to come from big companies with their teams and focus groups and things like that. It's going to come from people who are dramatically reimagining the way that industries work. And those type of solutions are not going to come from the big companies. They're going to come from the builders, right? And founders who are in this space. So it's a really exciting time to build, right? That being said, there's so much hype right now. I'm sure you guys are familiar with this, the Gartner hype cycle. It starts with the innovation trigger, goes to like the peak of inflated expectations, and then down to the trough of disillusionment, and then and so on, right? I'm sure you've all seen this before. The question is like, where is kind of Gen AI and AI related solutions? Where are they on this hype cycle right now? Well, I mean, some people argue we're here. We still got we still got a ways to go. Some people actually argue that there is no this doesn't apply to AI. Like it's exponent like forever. We're going to go up and to the right. We're going to generate AGI and then ASI, and then within 5 years none of us will have to work again, right? Because like the rules don't apply to AI, right? But if you believe that things do follow this pattern, right? Are we here? Are we up here? Are we at the peak? Is like today the peak, or is it like are we actually past the peak a little bit? I mean, clearly we're kind of, from my point of view, we're clearly somewhere up there. Somewhere, I think we're most likely past the peak. And in fact, if you look at Gartner's, in August, this is where they report. You look at where did they put generative AI? We're right there, right? And you can see this. You can see this in terms of the headlines that are being shared now. You can see this in terms of, people are starting to ask questions about, well, hey, where's the ROI? Like we're spending all this money on these solutions. They don't work as well as was promised, right? And this is inevitable because the promises were just insanely sky high. It was like I mentioned, we have people in the AI industry that are saying, with a straight face, saying, well, we better set up like universal basic income right now, UBI. Let's talk about UBI right now, because within a handful of years, no one's going to need to work again because AI is going to do all of our jobs. And so anybody who's ever worked with one of these systems knows that this is not happening within the next 5 years or 10 years, for that matter. It's going to be a long time before we're at a point where that people don't need to work again. Right. But that's the type of things that were promised, and money was raised on this, and like the type of stories they're talking about. This is how you get, massive high valuations and raising money at crazy valuations for like these type of companies without proven business models, right? But you know what? This is the stuff that was promised, and the real world is going to be a lot more complicated than that, right? There's going to be all these barriers to actually getting these deployed, or even if they get them deployed, to get them to actually see an ROI, right? And you're starting to see that, and you're starting to see a little bit of that backlash about like, overinflated AI, AI startups and everything, right? So you're starting, but that does not mean that, there's nothing to AI, right? There's that's not going to have a long-term impact. All it means is that within the next 1 to 3 years, there's going to be a time where it's going to become just profoundly like uncool to be an Gen AI founder. You're gonna be like, oh yeah, man, another one of those. Like, oh, what are you like? What's your business model? Just like, burning money on GPUs and like that's it, right? That is that will happen, right? That does not mean that there's not long-term impact. You saw the same cycle like in the 99 to 2000s, where it was, I mean, you had companies like Amazon come out of that, but you also had companies like Webvan and others, right? They were too early. They were like, they're telling a big story. It's like, yes, that eventually happened, but like they were not, 95% of them were not the winners, but you got some that are generational companies that came out of that. This is a similar type of thing, right? For Gen AI. Right, and so that becomes a question: how do you identify those winners? Right, out of these, you have all this excitement. You're going to have these companies that are going to be, centacorn, even trillion-dollar companies. I'm convinced there will be at least one, perhaps multiple trillion-dollar companies that are formed, that are like started, last year, this year, next year, like during this wave, right? And so you have that on one side, and on the other side, it's like, everybody, it seems like everybody is an AI founder now. Like they just, they add .ai to their, they register a .ai domain. They're talking about AI. There's also on the investor interest side. I mean, I talk with, even LPs. When they're talking to their VCs, the VCs are talking. The LPs are telling them don't tell me about anything other than AI. I'm not interested in anything other than AI. Tell me about AI deals. So it's been even driven by the capital on that side, and so there's leading to like a lot of overflated valuations and a bunch of other things. So how can you actually identify the winners here, right? So I'll talk specifically around early stage startups, because that's where I primarily deal. But for early stage startups, it's really all about the team, right? This is a highly competitive time. If you kind of drop a pin here and you say, hey, like a startup that's building, AI for help with legal tech, or AI for help originate mortgages, or any of these other ideas, there's hundreds of startups, or would-be startups that are all probably within a 30-mile radius of here that are trying to build the same thing. Right, they have the same idea, right? And so, like, what separates those? It's all about the team and the founding team, because you're very likely to pivot. I mean, you look at all the success stories from the past. It's actually very rare to have a company that started with a vision and then continued to build that, and then eventually went to acquisition, IPO, or high level of success. Most of the time, they end up pivoting along the way. And so, like, the one concept there is the team. And so, like, it's always the best bet is always to invest in the founding team, right? And so, what are some of the traits like that we look at in terms of what makes successful early stage AI founders, right? And then so number one is like they should be an impressive individual. They should have some type of special skill that makes them stand out in some way, right? They should have some deep expertise in some area. It can be a domain specific about an industry, it could be subject matter, it could be about technology, but they have to be deep in some area. They have to be a world-class expert in something. They cannot be a generalist just across everything. They're very unlikely to be successful, right? They have to be autodidactic, which means that they have to naturally learn. They want to learn and like learn by themselves. This is because things move so quickly in this Gen AI space. If they are not constantly learning, they will be left behind. I mean, look a year ago. Look at the state-of-the-art models and like the capabilities from 1 year ago versus today, and you can see that like everything from 1 year ago is now completely obsolete. right? And so if you're not on top of this, if you're not like constantly learning, yeah, you will be left behind, right? You have to have a high magnitude, like high horsepower, like higher RPM, right? Type of individual, right? You have to be capable of first principles thinking. You have to not just take cookie cutter patterns that you've seen from the past and then blindly apply them. You need to be able to think about problems from first principles and then design those type of innovative solutions that would come from that, right? You have to be convincing. You have to be a good storyteller. You have to be able to convince teammates, co-founders to join you. You have to be able to convince investors to give you money. You have to convince customers to, yes, take a chance on this early stage startup instead of like this much more established company, right? You have to have the raw leadership skills to be able to scale an organization. Just you want to be somebody that like people want to follow. You have to be at the right life stage. There's a lot of people that have all the talent, but like maybe there's other things that are happening in their life right now that don't allow them to spend the 80 or 90 hours a week that's required to build a successful startup. So like they have to be at that right life stage. They have to not be able to work without a salary for some period of time. They have to like not have family obligations, other things that will prevent them from devoting their life to this, right? They have to have the right level of ambition. There's a lot of times you see founders, especially early stage founders, their ambitious level is not like calibrated correctly. So it's either the game within venture is that I'll give you $1 million today, but you have to tell me a story about how you're going to give me $100 million back in 5 to 7 to maybe 10 years. That's the game, right? And so you have to be able to tell that story about like how you're going to do that, right? But you have to be able to do that in a way that is credible, right? That of course anybody would say, hey, we're going to solve world hunger, we're going to like cure cancer, those type of things, right? Okay, great, but like do you actually believe you can do it and then have the team to do it, right? You have to have grit and perseverance. You have to not give up easily, right? There's a lot of ups and downs through startup life. As a founder, especially if you think about this, we're about to enter this trough of disillusionment. It's going to become really hard to be an AI founder, and so if you do not have that type of connection to the problem, if you don't have that grit and perseverance to make it through that, where it becomes really hard to raise money, where your biggest customer is going to cancel, right? You're going to have like a key employee leave. You're going to you'll get sued. You're going to run out of money and like and not be able to make payroll. Like you have to be able to have the grit and perseverance to like not just give up, right? And then for a co-founding team, you want to basically, the best teams have complementary skills but mutual respect, right? So many times you see startup founders, we all naturally do this. We try to gravitate to people that are most like us. And when you're talking about building teams, you want to almost do the opposite. You want to find somebody who's different from you, right? Because they're going to bring their own skills, their own network, everything like that. That comes from that. And so the best teams are, you need to have mutual respect. Like you have to be able to say, hey, I fully delegate this area to you, and I fully trust that you're going to do a good job at it, and you're in fact will do a better job than I ever could on this area. But the best teams are actually diverse teams that have like different types of backgrounds, different types of skills, right? Yeah, and then I'll skip ahead, but one of the other areas around this is that none of the fundamentals change. So many AI startups I see, they do not have good answers to these questions. Who is your customer? What is the burning need problem you're trying to solve for that customer, right? Is the customer willing to pay for it? How much are they willing to pay? What's the size of that market? How many of those customers are there in the world, right? How do you identify and reach those customers? What are the messages that resonate with those customers? Is their solution 10 times better than the alternatives? It can't just be 10% better, it has to be 10 times better, right? These were true before Gen AI, this will be true after Gen AI as well. And so many startups, they do not know the answers to these questions. They're still able to raise money because there's hype around AI. But I think what will happen is that the companies that do not have good answers to these questions, they're the ones that are going to be, they're not going to make it through this next, this next kind of trough of disillusionment. They're going to have a harder time to raise money. They're going to be undercapitalized, and they're going to end up ultimately getting, acqui-hired or just shutting down. Right, and so there's going to be a much greater emphasis going forward on like the answer to these types of questions, and not like, well, we're gonna sell at a loss and then make it up via scale, right? That's like where where there's, I mean, there's strong arguments for doing that in terms of like it's a land grab, all of this, but you have to be thoughtful about the strategy and actually have a real customer that you're targeting and make sure you're targeting some real burning needs and make sure there's a willingness to pay because in many cases it's easy to get users, it's hard to get customers like paying users, right? Just quickly, if you look at like just going through kind of some statistics about early stage companies, and these are interesting and sometimes counter to people's intuition, right? So if you think about like what percentage of startups will fail within their first funded startups will fail within their first 5 years. Any guesses? Yeah, half of funded startups will fail in the first 5 years, right? How many will fail in their first year? Okay, 20%. 20% of funded startups will fail in their first year. How many, like the biggest companies, so you look at the biggest companies, what percentage of them have multiple co-founders versus a solo founder? Okay, 65%. So which means 35% of these are solo founder. This is interesting, right? What is the average age of a tech founder at the time that they start their company? These are for funded technology companies, right? Any guess? 25, 30? It's actually 42 years old. So how about the average age of the most successful tech funders, the ones that go on to IPO and exit? At the time they founded their company, what do you think? Do you think it's higher or lower than the average? It's higher. It's 45. Right? So, I mean, this is like, there's an image here in Silicon Valley of you have your Mark Zuckerbergs and others that'll be like college dropout although those stories do exist, the majority of them are actually, these are people that are starting their companies often later in their career, often they're serial entrepreneurs that they have experience in the past, right? What is the chance of success for a 50-year-old founder, like a founder who's 50 years old when they founded their company versus when they're 30-year-olds founded their company? Any guesses? A 50-year-old is 2 times as likely to succeed than a 30-year-old. All right. And what is the kind of revenue for companies who are founded by serial founders versus a first-time founder? If you measure like just in terms of the revenue, like how many do you think like the serial founders probably more, right? More than a first-time founder. They kind of more experienced and know how to sell, better connections, etc. What do you think that multiple is? I guess 10? Not 10, so it's almost 2. So it's almost twice as much revenue if you're a serial founder versus whether your company was successful or not in the past, right? So these kind of go counter to some some type of like conventional wisdom there. But if you look at the data, there certainly is benefits there, and it's clear across the board. There are benefits to experience. Look at whether older founders in general, perform better than younger founders. There's a peak is kind of their 40s to 50s. They're more likely to go on to fundraising rounds. Are more likely to have bigger exits there. And so that just points to there is value to experience, right? There's an image that it's like, hey, early stage founders, younger founders are going to be much more likely to succeed. The data actually points in the other direction, that people who have a little bit more experience, end up doing better, right? Another data point, like you talk about things like founder communities and accelerators, right? So startups that participate in some type of accelerator program, they end up raising between 50% and 170% more from investors, and they'd be more likely to be alive to be acquired than similar startups who didn't participate in that. And so there was a whole a Harvard Business School study around why this was the case, like why accelerators end up doing well. It came down to 3 areas. One is around rapid, intense feedback. Founders are naturally, stubborn, and they often don't take feedback well. I mean, it's part of hey, you want to have grit and perseverance, right? You don't want to give up. That being said, in some cases you do need to pivot. And so understanding that that type of rapid intense feedback, not just small feedback over time, but having a rapid intense feedback, it helps with that process. Having this type of kind of friendly kind of sibling rivalry and support there, that where you have a group and a cohort together, where you're kind of in it together. You see other startups that are at the same vintage, and then you end up there ends up being this kind of sibling rivalry effect that helps push founders forward, but also provide that support network, right? And then deadlines, like can't overemphasize this about like the importance of deadlines. And so having a fit schedule and tight deadlines, there's always this trade-off when you're a founder about kind of how do we kind of achieve broad learning while also like emphasizing execution, because you don't want to kind of just be blindly like I'm only executing and not seeing the forest for the trees, but then you also don't, but like execution is extremely important for startups. And so having tight deadlines and regular deadlines really helps with their progress forward. So these are three areas that like, turn out to be really important for early stage startups. And so I'll talk briefly around Inception. This is like a new style of accelerator program that is really different than most other accelerators. The typical accelerators are not really a great fit for like these most talented builders, like people like serial entrepreneurs, exited founders, et cetera, because they have an adverse selection problem, because they will naturally take a large chunk of equity in these companies, and then by doing so, they end up attracting exactly the founder. They end up like not being able to attract the very, very best, right? And so, because founders that caliber, they have different standards, right? They are looking for quality, right? They're looking for something at early stage. They don't want to waste time on low value add programs, and they thrive in the kind of those most high pressure environments. So that's our accelerator model. We built like an amazing community of Inception founders there. We run these in-person retreats that are 3 days long. They're 72 hours. Most importantly, we do not take any equity from the companies. We're in fact a nonprofit, a 501c3 nonprofit that we don't take any equities. We don't charge the founders because we're just solely focused on finding the very best entrepreneurs to come to our 3-day retreats, right? It's not a big time commitment. It's not a 3-month program. It's a 3-day program. And the promise there is for anybody who comes, will then it's like, hey, do you want to go for this all expenses paid 3-day weekend of this amazing resort, with about 12 to 15 other early stage founders who are all trying to build an AI. And at that last day, you get to, a chance to pitch in front of like a room full of VCs. Like, for the right type of founder at the right stage, like it's like catnip. They will, it's like, of course I'm gonna come. And of course it's non-dilutive. Don't take any equity there for that as well. And because of that, we're able to attract really the best founders anywhere. Yeah, and then we've had 168 founders go through this program so far. We've had 35 companies that have actually formed out of our program that have raised substantial amounts of money from top tier VCs, over $120 million raised so far, just in seed money. From these companies. And then if you look at some of the stats here, average work experience 14 years, a lot of people have PhDs, a lot of repeat founders there, a lot of people who have had a successful exit in the past as well. And then most of the people in the program come as direct referrals from other founders. So our NPS is 86. Almost everyone who goes to the program not only becomes not only loves the program but becomes an evangelist, and then they tell all of their other great entrepreneurs that they know, and then that's just why we get like almost all of the founders we have come through are via referral, and that's how we keep the quality bar super high. And so we have a lot of founders in here that are prior unicorn founders, 9-figure exits, people who have worked at all the at many of the top companies and projects here in the Bay Area and beyond, right? And yeah, and then we hold these demo days. Not only do we get all the top VCs to come to our demo days, but they actually make investments. These are all companies. These are all investors that have invested in those 35 Inception companies so far, and it's literally the list of who's who of pretty much every top investor has they come to our demo days, and not only come, but they also end up making investments as well. So. Yeah. Anyway, so it was great. It was great being here. If anybody's interested, you can connect with me on LinkedIn. I've line WeChat as well. If any of you guys are want to do WeChat, but yes, and I'll be around the conference for the rest of the day. Happy to chat with you more around. If you're anything around AI and entrepreneurship, I would love to chat. But anyway, thank you everyone for coming. Yeah.